An oil price shock might be just around the corner. All it takes is a single geopolitical event or a sudden supply disruption and a chain reaction kicks off that could suddenly gut your savings. We've seen it happen before and we'll see it happen again. But what if there was an escape as that chaos unfolds? A digital safe haven built for this exact moment is quietly gaining power. The next big energy crisis is going to create a perfect storm for Bitcoin. But will it skyrocket or become the ultimate hedge against a failing system? Or will it get dragged down with every other asset? The answer will define the future of our money. So to get the escape, you first need to understand the prison. An oil shock isn't just about paying more at the pump. It's a virus that actually infects the entire global economy. The reason why is because modern economy runs on oil. Oil is the lifeblood of our civilization. It powers the ship that carry our goods, the trucks that stock our shelves, and the factories that build our world. When its price exploded, the cost of everything shoots up with it. Your morning coffee costs more because shipping the beans costs more. That Amazon package costs more because the delivery fan costs more to fuel now. Your new phone costs more because the plastic it's made from is also an oil byproduct. This isn't just a theory, it's history. Think back to the 1970s oil crisis. The world was thrown into a decade of stagflation, a nasty cocktail of zero economic growth and runaway inflation. People's life savings were wiped out. Their paychecks bought less and less every single month. So while the energy markets are navigating a period of volatility in March 2026 due to geopolitical tension, the underlying fragility of our supply chain has never been more obvious. We are always one headline away from the next crisis, and when it hits, the first casualty is the value of your money. The dollar, the euro, the pound, all of this fiat currency, they all starts to bleed purchasing power. This is the problem. It's a slow motion robbery of your wealth, and the traditional financial system is holding the door open, essentially a hidden tax for all of us. So the crisis hits. Inflation is raging. What do the people in charge, the central banks, do? Well, they're trapped now. They have two buttons, and they're both terrible options. Option 1, they can jack up interest rate to fight inflation. This makes borrowing money more expensive, slows the economy to a crawl, and usually kicks off a nasty recession. Companies start laying people off, markets crash, and everyone feels the pain. They might tame inflation, but they risk burning the whole house down to do it. Now, option 2, they do the opposite. They keep rates low and maybe even print more money to try and stop a crash from happening, stop a recession from happening. But that's like throwing gasoline on a fire. More money chasing the same amount of goods just makes inflation even worse, and you risk spiraling into hyperinflation where the currency becomes basically worthless. This is a fatal flaw of the fiat system. In a real crisis, the authorities have to choose between a recession or torching the currency. Either way, you lose. Your job is at risk or your savings evaporate. There's no escape inside the traditional system. So where do you turn to? I think this is where Bitcoin comes into the picture. Not as some quick get-rich-quick scheme, but as a totally different kind of financial asset. It was literally designed to be an escape from the exact problem we're talking about. While central banks can print endless money with a few keystrokes, Bitcoin's supply is mathematically sealed. Its creator Satoshi Nakamoto hard-coded a permanent cap of 21 million coins. There will never, ever be more. No government, no banks, and no CEO can decide to just make more. This is absolute scarcity is Bitcoin's superpower. Even better, Bitcoin has a built-in automatic defense against inflation called the halving. Roughly every 4 years, the amount of new Bitcoin being created gets cut in half. The most recent halving in 2024 has already pushed Bitcoin inflation rate to around 0.83 and 0.84%, well below the 2% target that most central banks aim for. And it's only going to keep dropping. It is a system of verifiable digital scarcity that's the complete opposite of the endlessly inflatable government currencies. So when an oil shock sends an inflation wave that eats away at the value of fiat money, investors and eventually companies will start looking for a safe harbor, a place to store their wealth that can't be devalued. This is the heart of the skyrocket thesis. Bitcoin isn't just another asset, it's a parallel financial system waiting for its moments. Now you might think that gold also fills the same role, and I do believe so. But there is one thing that is key in Bitcoin that gold doesn't have, and that is portability. And if you think this is all just theory, you haven't been paying attention to what's already happening. For millions of people around the world, Bitcoin isn't an investment, it's a survival tool. Just look at countries suffering from hyperinflation like Argentina and Venezuela. In these places, people watch their life savings get vaporized by triple-digit inflation. Banking systems are a mess, and government lock down money with strict capital controls. For them, Bitcoin is an escape hatch. They use it to protect their wealth from a collapsing currency and to receive money from families abroad without getting gouged by fees and capital controls. In El Salvador, it's being woven into daily economy. It's a lifeline you can access with just a basic phone, operating completely outside the control of the very institution that failed them, and it is internationally recognized. People have even used Bitcoin to escape war, as I said again with the portability one, carrying their life saving across borders, not in a bag full of cash, which is very noticeable, but in their head, simply by memorizing a 12-word phrase. This is the ultimate proof that Bitcoin works as a store of value precisely when traditional systems fall apart. It is a hedge in a war zone, and a currency crisis caused by an oil shock is basically economic warfare on a global scale. So we've unpacked the oil shock problem and why Bitcoin's very design make it a potential answer. If this is clicking for you and you want to stay ahead of how these global events affect your money, make sure you're subscribed to our channel. That's where we go even deeper on this stuff and far from the noise of mainstream headlines. Now, let's be honest here. It's not all sunshine and rainbows. The same crisis that could send Bitcoin soaring could also cause it to plummet, at least at first. The reason is plenty simple. People still think that Bitcoin is some kind of stock, some kind of risk-on asset. And that means that when a big crisis hits, like an oil shock threatening a global recession, the first instinct of big money investors is to sell everything that isn't cash or government bonds and run for the hills. They de-risk, and in that panic, Bitcoin could also get sold off hard right alongside stocks and real estate. And there's another thing, that is the miners. The Bitcoin network is secured by a global army of miners running computers that use a massive amount of energy. A long period of sky-high energy prices would wreck their profit margins. If the price of Bitcoin doesn't rise fast enough to cover those costs, miners could be forced to sell their Bitcoin holdings just to keep the lights on, putting huge selling pressure on the price. The relationship between oil and Bitcoin isn't just a straight line. It's a tug of war between two big ideas. Bitcoin's the risky tech asset versus Bitcoin is the digital gold. In the chaos of a market crash, the risky asset story could easily win out in the short term. So, what's the bottom line? On one hand, an oil shock unleashes inflation that perfectly exposes the weakness of our fiat currency system. It forces everyone to face the fact that their money is designed to lose value. This creates a powerful argument for an asset like Bitcoin, with its finite supply and immunity to political games. Its real-world use as a survival tool in struggling economies proves its power. On the other hand, the initial panic of the global crisis could trigger a mad dash for cash that drags Bitcoin down with everything else. The path to become a true safe haven won't be smooth ride for Bitcoin. It will be volatile. The real question the next energy crisis will force is this. Will people run to the familiar system that programmed to devalue their savings, or will they take a leap into a decentralized, provably scarce alternative? The short-term price is anyone's guess, but the long-term trend seems to be pointing in one direction. The world is slowly tensing up from geopolitical tension, and I think Bitcoin is built for this. When people need money to save from their falling currency due to wars, Bitcoin is only the answer. What's your take? When the next energy crisis hits, are you running toward the Bitcoin or away from it? Let me know your game plan in the comments below. And if you enjoyed this breakdown, do me a favor and hit that like button. Anyways, I'll see you guys next time. Bye bye.